fundamentals. The way market has panned out in the last 3-4 weeks, with still a lot of earnings which lie ahead on the one side, on the other, yields, global yields surging, making investors nervous. What is the risk reward looking like in the medium term? Which way do you think the balance is tilted?
No, certainly. As far as fundamentals are concerned and corporate performances are concerned, this quarter also we are going to see the repeat of previous quarter, where certain sectors did well, and wherever there was a hope of turnaround, they will take a bit longer. And mainly in the financial sector, banking and finance, I think it will take a bit more of time before normalcy comes in, and there the strong players they will work out. Global yields and oil prices and all that, that is getting factored in, and we don't see any further damage coming out of it. For example, oil prices, the impact is already priced in, and in our view, the global oil prices have peaked out almost. So nothing negative over there. On currency, recently we have seen some pressure. We feel at plus minus 2%. That is the band in which it should stabilize now, which again will not cause any concerns. Therefore, we have to get back to the sectors and the companies. And because of the balance sheet related issues, we are finding that in many places the previous large players, they are giving way to the ones who are going to survive because of their balance sheet being good. For example, in consumer space, there is a very good opportunity, but some companies, they are not there to take advantage of the market opportunities that they are facing. Classic example is if you look at versus suiting and textiles, then Raymond's gain is Reed and Taylor's loss. Reed and Taylor is not there to push hard and market aggressively, and so all that is reflecting in Raymond's performance. Similarly, you look at any other company, durables and televisions and washing machines, the space that Videocon is vacating is being grabbed by all others, so whether it is Electrolux or new brands like Lloyd or whatever. So one has to look at in this current situation, the businesses which are sound and they have maintained their finances in such a way that their balance sheet is also right sized. They are the ones who are going to survive in the long run. And I repeat again, which I have been repeating for last 1 to 2 years, that if you look at top 100 companies in India in last 3 years, at least half of them, they would have changed places, and so a new set of winners that is emerging, and our job is to identify such winners. So that's broadly what we sense here.
That's Devesh. I just want to mark the markets right now. We have clearly come off. The afternoon session is turning out to be quite choppy, as you've seen quite a decisive fall in the markets right now. 10,560 and counting, down 0.5%. The Sensex has shaved off about 135 points. Pull up the metals index for you, which is the top drag. It has continued to be from the word go. PSU banks joining the losing list. You've got pharmaceuticals, energy, MNC, service, infrastructure, and now it's only realty and IT that are managing to stand out in the green. The broader end of the market seems to be falling at a far hectic pace right now, with the small cap index already shaving off almost 0.8%. Grasim loses steam, GAIL India is in the red, and of course all the metal counters led by Hindalco, Tata Steel are in the red as we speak. Vedanta joining the pack, HPCL, IOC too, and of course the market breadth continues to veer in favor of the losing side. Well, Devesh, another topic is, as you were flagging off as well, the currency, the rupee hitting a fresh 13-month low as well. What is the outlook on some of the export-oriented plays that could be impacted on the back of this?
No, so we are seeing IT, the sector where we like the sector, but it has become more attractive, and similarly, exporters, they are likely to benefit because of this. But having said that, we don't see currency weakening any further, and therefore, wherever exporters, wherever they have a fundamental edge over others, they'll do well, and we don't see the composition of exports or volume of exports increasing significantly because of this. So this will result in improvement in margins of companies who are already well entrenched and doing well. And so the world is changing, and I thought I'll point out that between our last discussion and now, the background has changed, and CIMB and China Galaxy, they have entered a 50-50 JV, which you can see here. So that was what I thought I'll point out.
Sure, great. Probably, some good research coming in from China about a lot of products, because chemical sector, a lot of sectors here in India got re-rated because of the China angle into it. So probably that research will come in handy now. Devesh, is it not?
Yes, certainly. No, so I am getting more. Yes, we should look at that. Yep.
Politics, and this particular month will be important going into 15th of May, Karnataka elections. People are talking about neck and neck. Then people are scared if BJP loses out.
Yeah.
From the market standpoint, analyze the what if analysis for us.
So if I look back to 2004 and draw some similarities, then I think even after Mr. Vajpayee's government lost in the election, markets recovered very quickly, because markets although looks at politics very closely, but they also look at implications of those changes. And if we look at India at current point, so Karnataka is important, but not that important, and Karnataka will be seen as a pointer to the general elections that are coming in 2019. And if you look at any outcome, there are two outcomes: whether the same government comes back or then there's a different government. We feel that whatever reforms that we have seen on GST, demonetization, or on the banking side, the cleanup drive, on corporate transparency, so all this will have the multiplier effect playing out in the times to come, and so market will benefit from all these fundamental changes. Although announcement effect may be there, and so politics is important, but at this point of time, whatever has been done, the impact of all those changes, all those reforms, that will keep the market in the positive side for next 5 years.
Right now what has happened is let's try just understand that the crack which has come in the last 20 minutes in trade is because the European markets have opened lower, and the scare of US bond yields surging to 8%, 3%, and hurting risky assets have come to the fore. How important this issue is? If the US bond yields remain elevated, any thoughts how much risk does it pose to global equity markets?
No, so we look at this in two contexts. One is the allocation between equities and bonds, and second part is between various markets. So when we look at the Indian market, even today it is not getting much from global markets, so the large allocation, and we feel that this allocation will continue. And secondly, is on bond yield side also, we feel that the yields are close to their peak. So from here, wherever we are, nervousness may be there that rising yields may cause some damage, or oil prices may start moving the way they were moving in the earlier round. But we feel that we have crossed that phase, and we are close to peak on both the counts where there could be some nervousness. And politics, we feel that right now it is more of a coffee table gossip than people being worried about its impact changing the economy in a big way.
Devesh.